Everyone, I'm Charles Payne. This is Making Money. Okay, folks, so the stock market year-end rally, let's face it, it was baked in a cake. Even the staunchest bears were saying, maybe we got to wait until next year because everyone was expecting octane from the Fed. Of course, that was going to be added to the big, beautiful law, massive tax reforms and refunds, domestic investment. And that was before, of course, Jay Powell slammed the notion of a December rate cut as far as it being a foregone conclusion. Look at this. Before he spoke, it was a 95% chance, that light blue bar. Now it's less than 50% right now for a December cut. Meanwhile, the word affordability has become something of a political dynamite, let's call it that, although the phenomenon certainly is not new. In fact, it dates back to the trillions of dollars poured into this economy during the Biden administration. And remember what we saw, massive spike inflation to 9.2%, right? And it's still trending lower since then, but we're reminded of a couple of things, right? Prices generally go up. They rarely go down, folks. In fact, when they do go down, you see that bar there? A lot of times they're associated with recessions, right? So a dire situation. They mostly go up. The main point, though, is that now we need wages to sort of start to catch up with this. And while wage free fall has stopped this year, and it's starting to turn up for blue-collar workers, we need it to really go up a lot more because that's the only way you're going to sort of alleviate that sticker shock. It's been going on from 2022, but there's no timestamp on it. Now, of course, the decision about wages might be a moot point for all of those folks who are receiving pink slips this month. I mean, a huge spike in the Challenger Gray numbers. Now, this is a great piece here. By the way, Challenger Gray, that was the biggest October layoff announcements in 2 decades. But Goldman's come up with this new tracker. I find it to be very compelling. And this goes even further than Challenger and Gray. And essentially what you're seeing is this line here. When we get above this line here, again, we start to get toward or signal a recession. And we're right above this line again right now. So I don't know why anyone in the business of monitoring the economy is not paying attention to that. And this is just one data point. There are a slew of them out there, right, screaming about a jobs crisis. First of all, it began with attrition. I was talking about this last year. You could see it starting, but soon we could see it on the layoff side, right? Blue line, these are folks who are searching, right? Searching, the internet, looking for, just ways of making money because they're going to lose their job. And this is your initial jobless claim. So, yeah, it's here now. But if this is right, this is for saying, sort of saying this is going to happen next. So, again, it's scary stuff, folks. However, the hawks and the Fed, they've been pretty adamant. Think about this. In a 48-hour period this week, 3 Fed presidents came up to talk about how bad inflation is and how much of a great problem that it is. Now, although the Feds have rallied together on this nonstop speaking tour, there are still those on the Federal Reserve who think that rate cuts are late, including my first guest on the show today, who says that the Fed has a recipe for getting policy wrong.
I think Fed policy is too restrictive. I think that policy is being made on a backward-looking basis. We shouldn't be making policy based on what happened 3 years ago. That is so backward-looking, and I think a recipe for getting policy wrong. Policy should be forward-looking, not this backward-looking.
Okay, folks, again, Stephen Myron saying that now, listen, Fed probably should cut rates at least 25 basis points at a minimum at this December meeting.